So let me bring in the floor show traders. Joining me now, Wedbush Chief Investment Strategist Paul Dietrich and Sound Planning Group CEO David Stryzewski. David, coming into the session today, we had a lot of big banks upping their models for recession. Does that change at all from where you stand, even with these constantly shape-shifting headlines about tariffs?
Well, you know, the world right now is just trying to figure out what's up and what's down. I think Lauren said it well with the liquidity in these tariffs. It's difficult to figure out, you know, which direction things are headed. I just know that right now we're in a different moment than we were last year and the year prior, where we had these amazing runs, whether the data came out good, bad, or neutral. We're now in a time where information's coming out. These headlines are hot and heavy. And, you know, there's a roller coaster ride that is certainly ahead of us right now as we're seeing more deterioration in some of the numbers.
Yeah, deterioration, but some of it, again, day by day is moving here. We just showed the big financials. Regionals were actually in the green earlier, and most of them are, but the big financials have just had a horrible time of it, Paul, and so that makes you wonder, weren't they supposed to be the one area or one of two areas or three areas that would be immune to all of this tariff talk?
Well, in terms of the financials, I mean, they're going to be hurt by these tariffs. But I really think you have to focus on the directional trend of the stock of the economy right now. And it is weakening, and it's going to continue to weaken. And that's going to affect financials negatively.
Okay, well, let's just continue on the vein of the fact that everything is changing as we speak. And that's why I'm looking down at all the headlines, because they're changing minute by minute. But, Paul, what is then the investment playbook? Just cut to it, because people are waking up furious. Then they think to themselves, okay, maybe my 401k will come back, or should I just get out of stocks? I mean, Citigroup just came out today and downgraded equities to neutral.
Exactly. And personally, managing the money that I manage, I'm largely in stocks. I mean, largely in bonds, cash, gold, utilities, things like that. If you have to be in equities, we're going into a business cycle change, which is a fancy word for a recession or a slowdown. And when that happens, you have to think about changing the mix that you have. You're going to have to get out of tech. That's not going to be a great investment in the next year or so. You want to be in consumer durables. You want to be in healthcare. You want to be in utilities, Costco, Walmart, companies, McDonald's, companies like that. These were the ones historically that did the best in the last two major recessions. And I think these are going to do well in any slowdown.
Okay. David, another headline. Maybe this 50% tariff on aluminum and steel that is coming in from Canada to the United States that we had seen indicated by the president wouldn't happen, or we had seen indicated by the Commerce Secretary and his conversations with Doug Ford, the Premier of Ottawa, calming things down. Trump has just said, I will let you know if 50% tariffs on Canada will go into effect. He says he's looking at reducing tariffs on Canada now. But he said probably so when asked if he would put it in. What are investors to believe? And maybe if they just tune out all of the headlines for the moment, where do you argue they should put their money?
Okay, great questions. I think short term, we're obviously seeing chaos, big swings on a daily. It's the worst day since 22, and now it's a okay positive day, or maybe a neutralish as it finishes with these better headlines. And so I think we're going to just see a lot of headlines. And so, we might see some tarifflation, though, just like you're talking about, these 50% tariffs on aluminum or whatever. I think that it's kind of interesting because a lot of this has been sizzle and it hasn't really hit us yet. I'm not saying that we're not going to see supply disruptions. But obviously, if we see a 50% tariff on something, it's going to be very, very, very disrupted, at least for a while. And so, where do we go right now? I think it's important, as the last guest was just even noting here, that we probably look outside of maybe even what 60/40 has just done and just directly allocating across the board. I think we've got to be a little bit more focused right now. And so a couple of things that I want to point out is that, hey, did Tesla change by, 50% on the negative side since December? No, they didn't change by 50%. But ultimately, this is a buy the dips moment. So I like taking some profits right now, and then, putting that into places like maybe some treasuries, but also looking at things like growth-oriented hedging strategies with like an annual reset that can give you none of the downside, but reasonable rates of return on the upside. I love gold and silver right now. In fact, if you look at silver today, it had an outstanding day. And it's ultimately sitting like 35% below its all-time high right now. I'm a big believer in the metal miners, and I think ultimately they're going to lead here over the next 3, maybe 5 years as we begin to drill, baby, drill, and we see new price valuations as Fort Knox is being estimated here in the next couple of weeks as well.
Yeah, most of the metal miners are moving into the green, and we just do want to say that silver up 2 1/3%, gold is up $25. Some of that is a safe haven play. Paul, David, good to have your perspective on a very, very tumultuous session here. One major